Can we talk a little bit about the institutional stuff we were talking about just before we started recording? Because it was a conversation we had recently, and that last year we thought the institutions would come, and we were told they were coming, and maybe some did or they didn't. You got a different perspective on this?
Yeah, I mean, we never really saw them. I mean, well, I think what people were seeing and calling institutional money was not really institutional money. It's what we would call high net worth money, which is in the US, maybe family offices or rich folks or some combination where I have a trust or, again, family office, which has different legal structures. And billions certainly came in via that route. And so you see that in a lot of the on-chain metrics that you talk about with others in terms of like strong hands. And I actually see those as stronger hands than the institutions that are likely to come in now for different reasons, because those folks are likely to sell faster.
Right.
But they're not in yet. A little bit. But if you look at the on-chain metrics and even what you're seeing on exchanges, our opinion is, and also in firsthand meetings that I've been doing with my team, the institutions are now the sharks in the moat circling the Bitcoin castle saying, okay, this looks like something that our clients want now. And it manifests itself in different ways, right? Some are basically saying, don't want to touch Bitcoin or crypto, but I might be interested in these yield products that use Bitcoin as collateral. They call that crypto. You might not call it Bitcoin or crypto, right? But some are saying, hey, I want direct exposure to Bitcoin or Ethereum or even what's next stuff, right? And so we're seeing all of this now from the big banks that have either fund of funds that basically choose which products go in the portfolios that are accessible to their clients, or maybe even in balance sheet money. And so we didn't see this en masse at all last year. And all of the large kind of allocation conferences that just happened in Miami, we saw it across the board. And so like literally from 0 to 1 in the last year. And I don't know for sure, but anecdotally, I would say a lot of the pullback that happened from November until, I guess, last week it actually created more fuel for that, right? Because a lot of these folks are very savvy and they say, look, well, I don't want to get in for the first time at 68,000. I'd rather get in for the first time at 40,000. And some of them may be even a little disappointed because we really haven't had a lot more troughs within the run up over the past 10 days, which I actually think could actually represent even more fuel for the next run up. So when people realize that there is no pullback to get in on, and if you look at what's happening in futures, I know it's not a macro discussion, but we're looking at negative funding rates right now, while we're going up 20% off the lows. Last time that happened, Bitcoin doubled very, very quickly, right? And so from a contrarian perspective, that's where you want to be. You want to see huge built up negative sentiment and pessimism while you're basically going up in price. It's just pure rocket fuel, right? When the futures markets basically are pricing in, very high kind of fees for taking the long side of a trade, that tends to put a wall or a ceiling on price. We have the opposite right now. We have a rising floor because of this pessimism that's built up over the last few weeks. And my point is that some of the savvy institutions, they don't really totally understand Bitcoin futures yet, but they see the pessimism versus the macros versus what's happening in the broader bond markets, which should all act as rocket fuel for risk on assets and going, this is interesting, right? So it's actually a really good time, at least in our opinion.